Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
Hello, we are live. All right, so as usual, what I'm doing is I am tweeting out and sharing this live stream. If you enjoy this content, please do drop a like. It really helps the channel. It really helps other people see this YouTube live stream and join. What is up? Silent Sandal, Eddie P, Crypt Technology, YY, Drew X. Welcome to the live stream. Mike and Mehdi, how are you doing today?
Good, Forrest. Doing good. About
Good
you?
for us.
Good. Awesome. So I'm doing about as well as I could be considering the direction of this market lately, but we're going to get into all of that. As you've probably already noticed, Bill is out today, so I'll be covering the market update. I won't be able to provide his level of expertise when it comes to the legacy financial system, which unfortunately does seem to be the catalyst for this crash. We're seeing tech stocks and even the S&P 500 do really poorly, largely based off of decisions and announcements from the Fed. Again, I cannot provide the vibrant color that Bill is so able to eloquently do in his market update, but we are going to focus heavily on price action. And let's just go ahead and jump into the live stream here. I'll go ahead and share my screen and share my slides. So crypto crash report. I'm going to give you the crypto crash report. Mehdi's going to give 22 predictions for the year of 2022. And then Mike's going to follow up with some undervalued layer 1 altcoins. So welcome to the Token Metrics live stream. If you don't already, follow us on all of these social media platforms, Twitter, Instagram, YouTube, LinkedIn. We are hiring. All right. If you are not a customer, subscribe today at tokenmetrics.com for some amazing investment research reports, newsletters every single day, as well as access to this incredible AI and machine learning based dashboard, as well as indices that show top cryptocurrencies to be investing in. If you would like to participate in this live stream, we do have Crypto Showdown and a little Q&A at the end here. We actually don't have altcoin overtime today because Bill's out, unfortunately. But go over to menti.com and use the code 62846299. That should be in the description below. Actually, so the correct Menti code is the one up there at the top, 62846299. This one down here is from our last live stream. We won't be using that. So make sure to use this one up top. One more time, 62846299. All right. And with that being said, I'm just going to jump into the market update. All right. Total cryptocurrency market cap. And guys, you need to understand that I am a perpetual Bitcoin, or not Bitcoin, but a perpetual crypto bull. And the reason I like to stay as exposed along to crypto as possible is this chart right here. This is total market cap. As you can see, since May of 2013, it has just been going up, and up. Obviously, there have been periods of recession, periods of bear markets. And at the end of the day, they, for lack of a better word, bear markets suck. They just do. And they can be very long and drawn out, and they shake out a lot of people from the crypto space. But then a bull market comes around and gives you 10, 20, 30x gains. Right? Or even higher if you're picking really, really solid cryptocurrencies within this market structure. Now, this trend line is really important to understand because while this looks like a linear trend line, we're actually on a logarithmic scale. And when you have a linear trend line on a logarithmic scale, that's equating to exponential growth. So this space, this is the fastest growing asset class in the world right now. It is growing faster than other asset classes in explosive asset classes in the past have grown. It's growing faster than television. It's growing faster than the .com era, the internet grew, right? This is the fastest growing asset class we've ever seen. Yet when we have a down day, people are wanting to sell here. And nothing here is financial advice. And to be quite honest, selling today, selling this week, in the grand scheme of things, could be the right move. I'm not going to sit here and say, don't sell, don't sell. What I can tell you is that personally, I'm not selling. And the reason why is because in crypto, you get paid for hodling, right? You get rewarded for hodling and being exposed to this absurdly fast growing asset class. You also just basic rules of trading is you buy support and you sell resistance. If we look at this structure, we are in what appears to be an ascending wedge. We have this bottom line here in blue. This is support. It is support. Not only that, but by definition, we're pretty much still in a bull market. We've had a series of higher highs, and we've yet to make a lower low on this end. Now, we have made our first kind of higher or lower high rather here, and that is a bit of a bearish sign. But if somebody put, not to be too vivid here, too intense here, but if somebody put a gun to your head and said, what direction do you think the market is going to go in the next following weeks? Well, since we're resting on support, gun to my head, I'm going to say it's probably going to get some sort of a bounce. And while it could break through this support and fall down to this trend line, that's a completely realistic thing to happen. It'll likely take quite a while for that to happen, right? If we look at bear markets in the past and the return back down to this trend line, we can see that this process of bleeding out back down to this trend line where we want to be aggressively accumulating crypto, aggressively buying crypto when it falls down to this trend line, took 819 days. So if it takes 800 days, we actually have a ton of time if we are going into a bear market to accumulate stable coins, right? And buy this trend line when it comes back down to this level. Now, I'm not saying we're going into a bear market. I actually, like I said when I came into this live stream, I am a perpetual crypto bull. I want to be as exposed to good, solid crypto projects as much as possible. And I'm willing to take on that risk. Now, your personal situation and your risk profile may be different. You may be in a situation where you have a nice large crypto portfolio, even despite this dip, but your financial situation may hinge on you being able to save some of that money, those stable coins. That's fine. That's your personal situation. For me personally, I don't want to be selling on support. I want to be selling on resistance, right? So even if we do fall through this structure in total cryptocurrency market cap, because I don't like selling support, I like selling resistance, I would be looking for a retest of this downtrend line, and then I'll sell up here. If we do fall through, there's a very strong chance that we do see a retest. You see bounce backs all the time in these drops, right? Everybody wants to sell down here, right? And instead, they should be selling up here on the retest, right? Sell on the retest and save yourself a lot of money by selling these bounces as opposed to selling the bottoms, right? So we usually want to be buying support. All right, so the other thing that's going on right now is very, very different from what we've seen in crypto for a very, very long time, if ever. This is altcoin dominance. So despite the fact that the market is correcting and crashing down to the bottom of this pattern, this wedge here, right? Which while we're looking at this, I'm gonna show you that this is a very, very similar pattern to what we saw in 2017 before we had the blow off top, right? Very, very similar pattern, just longer and more drawn out. Does that mean we're going to go parabolic? Absolutely not, but I think it's worth mentioning. Okay, so back over to altcoin dominance. Altcoin dominance is actually going up. This total cryptocurrency market cap going down is due in large part to people selling Bitcoin, but specific altcoins are actually doing extraordinarily well. Near protocol, a layer one solution that Mehdi and Micheal have come on and talked about multiple times, that we've been talking about at Token Metrics for a while now, really hasn't even flinched, right? If we go to CoinGecko, yes, today's been kind of a bad day, but Projects like Decentraland holding up extremely well. There's projects that are only down 3 or 4 or 5%. Phantom, which Mike's going to talk about in a little while. Cosmos, which we've been talking about for the last several weeks. We even talked about Yearn Finance in a DeFi revival. Iota, we've been talking about on this live stream for quite a while now, holding up really, really decently. I think Mike's going to have a little bit to talk about Iota in just a moment. We're moving into a market where, and I forget exactly how Bill phrases this. I think he's saying it's a market of cryptos rather than a crypto market, meaning you could have bought anything back in May of 2020 and seen ridiculous returns. You didn't have to do any work. In fact, you probably, right, the strategy here, you didn't really want to be trading. If you were trading here, you were probably making less money than if you would have just bought down here and held for the run up. But what we're seeing now is very, very different. We're seeing a very choppy market where if all you've been doing is buying and hodling altcoins and you're buying in here, your portfolio has just been largely going sideways. It's largely been going sideways, and you haven't been able to outperform the market because the market's just getting really nasty and volatile and choppy, right? It's shaking a lot of people out, bouncing back, getting people to FOMO in at the top, shaking them back out. Very nasty market right now. In order to succeed in a market like this, I believe it's incredibly important to be willing to make some shorter term trades and to be very, very diligent with your crypto strategy. Meaning, if you were passively managing your crypto portfolio, just hold, don't worry about it, don't consider taking profits, right? And I'm a big fan. A large portion of my portfolio is what I refer to as a value investing HODL portfolio. But I still look to trim 5 to 10% when the market's overextended. I look to add 5 to 10% when the market's oversold, right? I'm still trimming and adding as the market gives opportunities. I'm still actively managing that value investing portfolio. And I believe that if you aren't somebody who is actively managing and being diligent about keeping up with the crypto market, right? If you're in a community like Token Metrics and you're paying attention, I think you have a very, very big advantage over the people who are just going to sit and say, I'm going to hodl and let everything go sideways, right? You want to be picking altcoins that are going to outperform despite a market drop. Altcoins like we've been talking about, right? Near Protocol, Iota still looking really solid. Oasis, Rose looking very, very solid. Some of these layer one solutions that Mike's going to be talking about, these hidden gems. So I think it's incredibly important to join somewhere like Token Metrics where you can find those altcoins that are going to perform despite this market being nasty and choppy. I also think it's important to be willing to make some trades, not with your entire portfolio, but I think it's really, really important to not be in a situation where, oh, the market's crashing, we're on support here, I think I'm going to move 80% into stable coins right now. Well, if we get a bounce, which is incredibly likely, like I said, we could fall through this. We could absolutely fall through this. But if we get a bounce and you just move to 80% stable coins, you're in rough shape because you're going to have to buy back at 5 to 10% higher. And there you just lost 5 to 10% of your hard-earned portfolio because you got shaken out on support, right? So I'm not sitting here telling you to buy or sell. What I am saying is I think we're getting to a point where the people that actively manage their portfolio and they come up with investment theses and they do their due diligence and their research and they're willing to be a disciplined trader, if that's the path you want to go down, or a disciplined value investor, you will see much higher returns than the average person because we're past the point of just buying and letting the market do the work for you. We are in a chop market. So that being said, I do want to go over a couple of altcoins here, just a couple. We can see the S&P 500 starting to find some support here. And we know that the legacy market has been the primary driver of this dip. Bitcoin, I want to just walk over some very simple support levels, right? We want to buy support, sell resistance. Well, where is the support? Well, the support for Bitcoin right now is at about $42,000. And to be quite honest, what I believe is going to happen, I think we'll see some sort of consolidation in this range. And what I'm about to draw is going to seem like a very broad range all the way down to 40K and up to 46K. But I think that's where our consolidation is going to happen. Just like we saw this consolidation happen on top of 46K, as we predicted, all the way up to about 52.7K, a little bit under, we saw this block of consolidation for Bitcoin, right? Unless we just fortunately get a V bottom and a move back up, which honestly, I don't think is all of that likely. I think we will just start to see a block of consolidation between 40K and 46K, much like we just saw this block of consolidation, much like before that, we saw a block of consolidation between 53 and 60K. And before that, we saw a block of consolidation from 60 to 70K, right? So how do we make money while Bitcoin is chopping in this range? Well, we pick really solid altcoins and we look for opportunities to go long on them, right? When the market is down. So Ethereum, let's jump right into Ethereum. Ethereum has really solid support that we've been talking about for quite a while now at roughly $3,400. And that's where it's sitting. Oh, excuse me. Didn't mean to switch to that chart. That's where it's been sitting, $3,400. I think $3,400 is a pretty decent support level for ETH. Now we have wicked below, and the next support level would be 3,250, but I would personally feel fairly comfortable entering ETH here. We are on this kind of downtrend line. We're finding support on top of it. We could absolutely get a bounce here. Otherwise, I'd be looking for a more aggressive entry at 3,250 or maybe 2,880, which is the next support level down, right? Let's look at Matic. If we took Bitcoin, Ethereum, and the rest of the market out of the equation right now, and we just looked at the Matic chart, what does this look like to you? This looks like a bull market. We have a trend line moving upwards. We have a series of higher highs and higher lows. Higher highs, higher lows. And what have we made? We've now made a higher low. Could we crash back down to $1.72 or even $1.29? Absolutely, we could. But historically, with Matic, right, for the last 6 months or so, 7 months or so, you have been paid and rewarded for buying on this trend line. Guess where we're at right now? We just bounced off of this trend line. This is a great entry point if we start to consolidate onto this trend line. Happy to buy here. Personally, I have an order in at $1.98 that just didn't quite hit. A little bit too conservative with it. Would have been nice to get in at $2, but we don't know if this dip is over yet. So maybe I'll get filled at $1.98, right? But this is just very healthy pump correction. Matic looking very solid. Helium network, nice recovery. It's just been going sideways. It's consolidating, right? Yes, it's crashed a little bit recently with this in the last 2 days with everything else, but really it's not that bad of a correction, right? 18% in crypto. If you can't handle 18%, you're going to be in a world of hurt because crypto crashes far more than 18% very, very frequently, right? This is consolidating on a support level. This support level is about $37.80. Right? So we're consolidating on this support. May not be the worst short-term entry point if we see a bounce here. Sushi swap coming down to the levels that we've been talking about, the levels that we talked about in our live stream on Monday, right? And everyone thought sushi was going to be a runaway freight train and said, don't FOMO in, let it come down to these levels. We hit our first buy level, and now we started to tickle our second buy level, $7.12. Right? This is our support level that it's started to bounce off of, right? So if you're averaging in this range with maybe, and this is what I said on the premium webinar yesterday, personally, what I would do here is I would just structure my trade for 1/3 of my long position to be in this range, enter another 1/3 in this range, and then save 1/3, right, for a potential double bottom scenario here. Right? And if we bounce back, you're in profit. Iota coming down to its trend line. You have been rewarded for buying on this trend line, right? So a lot of solid, good projects are showing us really solid entry points. Now, this crash, like I said, may not be over yet. But if the market gives you an opportunity to buy on a trend line, look how nasty this crash was in July. But if you bought on this trend line, you were rewarded very handsomely in the form of Iota moving up 262%, right? So even if we are headed into a bear market, which I'm not saying we are, there's going to be opportunities to buy some bounces and make some of these trades. And maybe then we do go into a bear market, which would be unfortunate. But you can still make money in the short term by buying these support levels. Phantom coming down and holding this $2.66 support level that we talked about. Now it wicked down below it very briefly twice, but I still think 266 is a pretty solid but aggressive entry point. It's an aggressive entry. This is personally where I entered. And if Phantom bleeds back down to this trend line, that's where I'll be buying the bulk of my order. I'll be buying it at around $1.90 on this trend line if we get a steeper correction. Phantom, still very undervalued compared to other layer one solutions. Mike's going to tell you about that, right? As a momentum play, taking a small position at 266, I think is completely fine, knowing that that's a little bit high risk and you may want to have a stop loss in below 266 somewhere, as well as be prepared to buy it on the trend line. You've been very, very well rewarded for buying on this trend line in the past for Phantom. All right, guys, that's going to wrap it up for the market update. I'm going to kick things over to Mehdi to talk about 22 predictions that he has for the market in 2022.
Hello, Tokenmetrics family. I hope 2022 would be healthy and wealthy for every one of us. So I did a tweet yesterday on 22 prediction, my prediction for crypto in the year 2020, and I'll just share those predictions with you guys. Before I do that, some people have questions regarding RMRK. Why have we covered RMRK whilst it has a low TM score on our platform? So as Token Metrics, we are not just a fundamental research company. We also have quant models. So the quant model kind of guides us that, okay, at the moment, even though this is a good project, which has a high code review, which is 80% in case of RMRK, and good fundamental score, which is 80% in case of RMRK. But technically and quantitative wise, some of our AI models are kind of picking up signals that might not be a good entry for RMRK at the moment, and hence the score for that will be lower than, let's say, the suggestion we kind of give you a score. So if you are a TM subscriber, you'll get newsletter for fundamental scorecards as well as a code review, and RMRK scored 80% on both the levels. It has a lower score at the moment to the AI. Now, without further ado, let me I just explained that RMRK does have a TM score. It has a 80% on tech as well as fundamental Joe. So yeah, let me just share my thesis for 2022. 1 second. Guys, can you see my screen? Okay, 1 second. Let me quickly plug it back. Yeah. So before I jump into these predictions, I just want to share this disclaimer. This is not financial advice, and these are some of the trends I'm seeing as an analyst in public market and as a hobbyist when it comes to private markets. So during the weekends, I do kind of delve into private deals, speak with different VCs, syndicate DAOs, different developers, and these are some of the trends I feel like are quite possible going forward. So my first prediction is, I think it's a no-brainer. Ethereum in 2022 will migrate towards proof of stake, and we'll see some application of sharding being deployed. So I think this is definitely happening. 90% probability Ethereum will move to proof of stake. I feel like alternative layer one ecosystem will experience higher growth rate than Ethereum. So I feel Solana, Luna, AVAX, Near cumulatively together will flip Ethereum's market cap. So I believe Solana, Luna, AVAX, and Near could be 600, $700 billion cumulatively in 2022. I also think Layer 2 ecosystem will achieve a higher growth rate compared relative to Ethereum. So, for example, the way Ethereum's architecture is now being designed, it will have shards and it will have proof of stake, but it will have a higher capacity for rollups to kind of plug into Ethereum, and kind of Ethereum will deploy some of its computational activity on Layer 2. I'm a bit skeptical that this might affect its composability, but some of the Layer 2s will do really well. I think Matic has a good chance of entering top 10 market cap. So I don't know how the market will be in 2022, if it's a bull market, if it's a bear market, but I think Matic has a good chance of entering top 10. I think second half of the 2022 market will also hype into the fact that Matic will adopt ZK rollup. So that's my third prediction. My fourth prediction is that multi-chain layer ones and layer zero. So when I say multi-chain, I feel I'm saying Atom, Dot, AVAX, and Near. These are multi-chain layer ones and layer twos, and I feel like these will outperform monolithic layer ones. So monolithic layer ones is Solana and Cardano at the moment. Uh, that's my fourth prediction. I feel like Polkadot and Cosmos will have their own multi-chain moment in 2022, and I think market will wake up to the benefits of XCM, which is cross-chain communication for Polkadot, and IBC, which is inter-blockchain communication for Cosmos. And I think when it will be more visible and right up there in investors' faces, I think they'll wake up to this. I feel like with Cosmos, this is perhaps going to happen in the next couple of months, and I think Polkadot at the end of 2022, and they'll have their own summer multi-chain moment. My next prediction is that UST will become the second largest stablecoin behind USDT, and you're kind of already seeing some signs of it. Terra ecosystem is flourishing. UST is becoming very important for the whole ecosystem. Near is also adopting UST, and Cosmos. There is a high probability that UST might become the de facto stablecoin of Cosmos as well as Near ecosystem. So there's signs that UST will grow. Once UST grow, a lot of Luna will be burnt. But I would say Luna is a very high beta play. So uh, if there is a lot of volatility when it comes to UST, Luna kind of absorbs that volatility. So if you're trying to accumulate Luna, I've said this before. I think a price point between 50 to 60 is more safe for long term accumulation. Once you reach that, I think you can start accumulating Luna to kind of play this theme. Again, not financial advice. I feel like there will be a moment where we'll start seeing decentralized crypto indices. So DeFi Pulse index and Metaverse type of index kind of becoming very popular. If it were up to me, I will look to accumulate layer one infrastructure and DAO indices for my personal portfolio, because I feel like with the whole crypto space, these sectors give me the vast and the broadest exposure of having exposure to the whole crypto space. So if crypto goes to $100 trillion market cap, I can just make 50x at index level with all of these indices. Again, I feel like blockchain gaming projects with the useless gameplay will underdeliver. I am of the belief, if you have kind of watched my gaming thesis, I feel like play to earn games focusing play to earn are Ponzi schemes, similar to some of the DeFi projects out there. They kind of lure you in with high yield, but they're not sustainable. And I think blockchain games that just focuses on that rather than gameplay is another, it's similar story. So I think they'll underperform. My next prediction is that AAA gaming studios will enter crypto gaming and NFTs. We are already seeing some signs of it. I think last quarter we saw Ubisoft entering NFTs and I think they're kind of redeploying it on Tezos network. But I think you'll see more gaming studios and bigger names entering crypto gaming and NFTs. And I think they know how to make games, so their projects might do well. Again, this is very obvious. It's a no-brainer. I think NFTs will expand beyond profile picture. I think there will be unique applications in music, in creator economy, sports economy, metaverse, and gaming. And you already know my stance on this. I think in order to get the index level exposure, projects like Affinity, RMRK, Unique Network are some of the projects to keep an eye on. I'll repeat again: RMRK, Affinity, and Unique Network can give you index level exposure on some of these upcoming NFT themes. I've been speaking with a lot of investors lately, and I think it's a aggregate view that a lot of investors are as excited application in the future as they were in 2010, 2011 when it came to the emergence of Bitcoin. So this is something to keep an eye on. One thing I am kind of very bullish on is the composability. When I say composability, is I mean when NFT, DeFi, gaming, all of these sectors kind of interplay interchangeably together. So one example would be lending and borrowing of a gaming asset that is represented as an NFT. I think it will be very important, and I think it will become very interesting. There are few projects out there. One project is Arcade. I don't know if they have a coin yet, but they are kind of delving into the lending and borrowing of game assets. So I think this could be another interesting theme to kind of watch out for. We'll see metaverse start to mature and start to consolidate, and we'll start seeing a more useful use cases. One use case which is very obvious, and there's some projects that are kind of catering towards that, is office call and office meetings. So with remote work becoming the de facto for a lot of people, people will start arranging office calls and office meetings and virtual interaction in metaverse. So one project that kind of focuses on this is called Pexworld. It's not a public project, it's a private project, but there are a few projects kind of working on some interesting use cases. Yeah, virtual lands, I believe, will continue to increase in value, especially those metaverses which have strong network effects. So, CryptoVoxel, Sandbox, Decentraland, you'll kind of see their land value increase. I made this presentation yesterday, and we just got to know the news that Samsung bought land in Decentraland. But yeah, I think in 2022 you'll see more instances of that, and the land prices in these metaverse will just explode because they have the strongest network effects. Big brands will use NFTs and NFTs airdrops, in my opinion, to increase brand loyalty and recognition. And I believe with some of the projects like Affinity, they will even subsidize the cost of minting NFTs. So users do not have to mint or pay gas fees for NFTs. They'll just get the NFTs for kind of free. So I think this will be a very interesting theme. Now, before I jump into all of this, the next 7-8 themes that are left and 7-8 predictions I have left, I mentioned earlier that I'm very bullish on layer ones, and I don't know if you guys can see this. Yeah, you can't see this over here. But if you read the Electric Capital Developer Report, I'm not just pulling out all of these predictions out of thin air like sometimes Fed does when it comes to money printing. These predictions are a consolidation and curation of the facts that I work in a public market, that I have interest in private market. I've been speaking with the VCs, and I've also been doing research. So when it comes to layer one outperforming Ethereum, if you kind of see the developer activity, some of the projects like Cosmos, Polkadot, Near, and even for that matter of fact, AVAX and Solana, they have a very, very high developer activity, new developers, and they have far more marginal activity compared to Ethereum. Even though Ethereum has more developers, but the marginal activity in the similar time in history for Ethereum was very low. So this is one of the reasons why I'm also very bullish on layer zeros and layer ones that I mentioned earlier. So yeah, if you want to read all of these predictions again, we have put this as a tweet thread on in the description, so you can basically go down and save it as a tweet thread and basically follow it for the rest of the year. I also feel, in terms of my 15th prediction, blue chip NFT projects like CryptoPunks and Bored Ape Yacht Club will do well. And I think a lot of apes and penguins and punks will fade out. I'm pretty sure about this. So I think blue chip NFT is where the fun will be. I think getting exposure of these NFT via fractionalized NFTs could be a better idea than aping into brand new ones. I believe security tokens in final quarter of 2022 will pick up as a very strong theme. It's a hundred more than $100 trillion theme. There are few coins in my mind. I think one is called um Polymash, AVAX, and Levin Swap. These are like some of the security token themes. These are some of the tokens that kind of capture these themes well. So just be mindful of these tokens going forward if this theme picks up. My next prediction is that DeFi sector will fix its token economics. I think we'll move beyond it being Ponzi schemes. I think one latest example is Joint Finance. They fixed their token economics, and you kind of saw a spike in their token price. I think the whole DeFi sector will come to this realization, and we'll see very interesting and useful token utility going forward. I'm also very bullish on crypto structured products like Ribbon Finance, and I think it will become one of the hottest themes in DeFi, primarily because DeFi has this mentality of yield farming, looking for the next big returns, and I think structured product makes it interesting and makes it a bit more complex to kind of generate these type of returns through derivatives, through perpetuals, through future contracts, and so on and so forth. So very excited about this in 2022. Protocol owned liquidity. So one example is OHM, a bonding process, and tokamak reactors. I think this will become a norm going forward, and I think a lot of DeFi project will adopt governance tokens mechanisms similar to Curve Finance. So where so let's say you have more governance right if you are able to lock your tokens for a longer period of time. So if you do more staking for longer duration, your governance power will increase. So that's one of the innovations in tokenomics, and also a lot of projects owning their own liquidity. So the liquidity is not very fragile. I think these will be two uh, utmost important theme that we'll see going forward for DeFi, and I think it will help DeFi kind of mature out. I think we are already kind of seeing this theme even today. Some of the project, let's say near Cosmos, they're performing well relative coin in Ethereum. But I think overall crypto as a whole will become less correlated. Different sectors will have their own fundamentals, different price action, expectation, and valuation. So we already have a definition of DeFi 1, DeFi 2.0, metaverse, gaming, L1, L0, L2s. And I think these sectors will grow a life of their own. And I think we're already seeing some signs of it early in 2022. Uh, I think this will be the most controversial prediction. I don't think Ethereum will flip Bitcoin, and I also don't think Bitcoin will reach 100,000. I kind of quote Ray Dalio over here. So at the moment, if you kind of exclude jewelry and central bank reserve of gold, gold is 4 trillion, 5 trillion. So Bitcoin at the moment is 1 trillion. So it has already captured 25% market share of gold. So I think in order to capture 50 to 60% market share of gold, which has been a reserve currency for a long time, something bad has to happen. Either US dollar, either confidence in US dollar goes away, or we see hyperinflation. If these two scenario plays out, I think there will be a lot of trouble in the world, and I can't see that happening in 1 year's duration. That's why I think Bitcoin will be more range bounded between 40 to 70,000 maximum, but I don't think it will cross 100,000 at least next year. If it does, I think inflation will be beyond our control, and since some of the altcoins are also risk asset, I think it will come under a lot of pressure. So it won't be good for our bags. It won't be good for my bag personally. My final prediction is venture capital and centralized exchange will grow in dominance, and they will basically start developing monopolies, which is one of the sad scenarios of 2022. I'm already seeing some signs of it. So if you see Binance, they have their own venture arm. If you see Coinbase, they have their own venture arm. If you see Qcoin, Gate, all of these exchanges will have their venture arm. So they will be horizontally and vertically integrated, and they will basically control A to Z of crypto, and they will also act like investment banks going forward for crypto. So yeah, it's one of the predictions that I think will grow stronger as we go forward. I hope you guys enjoyed this segment, and I already have this as a tweet. So if you want to save it, you can basically follow that tweet in the description below. Thank you.
Thank you for those awesome predictions, Mehdi. Let's just go ahead and jump right into Mike, who's going to talk about some different undervalued altcoins, specifically pertaining to layer ones.
All right, thank you, gentlemen. I'm gonna go ahead and share my screen here. Okay, so some layer one blockchains that we believe are currently undervalued in comparison to the development of layer one blockchains in other respects. First one, Cadena. This is a proof of work braided blockchain consensus mechanism that was launched in 2016. Some notable features here. One of the advisors, Dr. Stuart Haber, was a co-inventor and the most cited author in Satoshi Nakamoto's 2008 white paper for BTC. So this individual is working directly with Cadena to build out their blockchain capabilities, which entails a braided proof of work consensus mechanism, coined Chainweb. And Cadena currently has the potential of achieving 400,000 transactions plus per second. So industry standard is around 1,000 transactions. I believe Ethereum is around 12 transactions a second. Bitcoin's 5. And industry standard is 1,000. So 400,000 transactions per second. Very fast and scalable blockchain that Cadena is trying to build out here. One notable feature that Cadena is offering as well. A lot of these smart contract developing layer one blockchains don't really have their own native programming language, but Cadena does. They have a smart contract language called Pact. It's a fully capable and Turing complete smart contract programming language like Solidity. So almost like a hedge on the development of Solidity. Cadena could be viewed as such. Very top tier development team. A lot of the developers on this team are seasoned smart contract developers coming from very respectable blockchain projects in the past. KDA currently almost 1 billion total. 70% of the token itself is going to be a mined token, I believe until 2035. And then 20% of the tokens going to go for the ecosystem, 6% for investors, and 3% for contributors. So very decentralized project from the get-go. 6% for investors and contributors is very low in comparison to other blockchain projects. It's one of the drawbacks is it does not have EVM compatibility, but it does have wrapped KDA. So it can have bridge capability to the Ethereum network. So Cadena, up and coming smart contract layer one platform. Here are some partners that it's currently partnered with: Celo, Cosmos, Ledger, Polkadot, Flux, Terra. So mind you, this is built on IBC consensus. So Cadena has the capability of connecting to the underlying IBC interoperability. So the money markets on Terra Luna, they can have a plug and play feature into Cadena from the interoperability that the IBC provides. So that was Cadena's just a brief overrun of what they're providing. Not a lot of development is occurring on this ecosystem currently, still being tinkered with and finalized in terms of development, but we are seeing some projects. I believe the biggest one is Flux currently. So this is a decentralized node distributing network that provides computing resources to blockchain networks. And they also have a pretty unique image of how their blockchain system is going to look like. Sorry about this. My internet is pretty slow when I share screens here, but this is how their blockchain architecture almost looks like here. We can zoom in, and these are just like a chain web, a braided proof of work consensus mechanism. So think of like Bitcoin, but like times 20. So the capabilities of Bitcoin scaling, they're just multiplying that through the proof of work consensus mechanism. And so pretty unique layer one that's kind of undervalued. Not a lot of ecosystem development yet, but if there is a ramp up in that, we could see a lot of FOMO into Cadena. Next one on the list, Iota. This was founded in 2015. They have 150 plus team members. So out of the three, this is the largest developing team and underlying team project here. They're using a DAG-based consensus mechanism called Tangle. They're capable of reaching 100,000 plus transactions per second. I believe in 2017, when they first ran their testnet, they were capable of 1,000 transactions per second, which is almost unheard of in 2017 when Ethereum and Bitcoin were just still gaining ground essentially. And they're also Solidity-based smart contract language. So this can have an underlying benefit in bringing more projects onto the ecosystem. So the EVM compatible projects, Shimmer Network and Assembly, they're currently developing on Iota. Assembly is going to be Iota's EVM compatible network where developers on Ethereum can leverage their projects and essentially shift onto Iota's DAG-based technology and start playing around with it and experimenting with the capabilities of it. So Shimmer Network and Assembly, they're being airdropped currently to holders of Iota. If you have Iota and you have it on the native Firefly wallet, you'll be eligible for the Shimmer Network and Assembly airdrops. And tokenomics, 93% of Iota was distributed through a public crowd sale and 7% to founders. So out of these three, this is the most decentralized project from the get-go. And currently, I believe all of the circulating supply is circulating. So that's a big plus as well. And as Shimmer Network and Assembly are developing, and people are noticing more development on this ecosystem, the actual token Iota is becoming more essentially harder to take off of exchanges. So I personally bought some Iota 3 weeks back on Gate, and they were not allowing me to withdraw. So I had to go to a different exchange entirely to actually get Iota off exchanges. So a lot of these exchanges are locking it up because of the fact that they might need the potential future of Iota's token for this ecosystem development to capitalize on it. And 70% of the tokens off of exchanges are staked as well. So a very big plus on that end. And we could see here there's some projects developing on Iota's ecosystem. Not very big ecosystem as of now, but as this develops more, we could see it expand very quickly. And also, there's a list here of companies that are interested or have mentioned Iota directly. So you can see here some very top tier companies: Siemens, HP, Intel, Panasonic. So these are all cited references to Iota from these companies. So it's also picking up some steam on the institutional side of things. Last but not least, Phantom. This was founded in 2018. They have 50 plus employees right now. Most notable individuals: Andre Koje and Daniel Esta. Andre Koje, he's well known for creating Urine Finance, as well as a slew of other DeFi-based projects that have been successful. Daniel, he created Time, Wonderland, Ice, and he's also collaborating with Sushi as of right now to bring that ecosystem more TVL. And their consensus mechanism is very similar to Iota. It's a DAG-based consensus mechanism, but it's called Lechesis, and it's a leaderless proof of stake as well. And the capability of this blockchain is 300 plus transactions per second. So very scalable as well. Sitting in the middle here in comparison to Cadena. Cadena is a little bit more scalable, but this is a proof of stake consensus mechanism. The most notable feature and something that might give it more leverage going forward is Phantom is, it has EVM compatibility and it has Cosmos SDK compatibility. So it has the capability of leveraging both ecosystems and really capitalizing on this wave of decentralization. Yeah, the ecosystem as well is rapidly growing this year. It surpassed Avalanche beginning of this year, 2022. Tokenomics out of all these two other blockchains here, Iota and Cadena. Phantom's a little bit more centralized. 30% ecosystem, 30% to team, 40% to the public sale. So just some things to take note of there. And we're also noticing here, so this is daily transactions of Avalanche, Phantom, and Ethereum. Here we can see, Avalanche is pretty sideways. Hasn't really increased in TVL or daily transactions. But we see here Phantom in yellow. It has a recent spike. End of December this year or last year, beginning of this year, it's had a really nice spike here. And comparison of Phantom in comparison to other layer one blockchains are doing very well. Ethereum 403 billion fully diluted, 79 for BNB. Phantom here at 9 billion, and it's. As I mentioned before, its transactions just recently surpassed that of Avalanche, and that's sitting at $68 billion. So the potential for Phantom to see a nice upswing here is pretty tremendous. And we can see here, this is the TVL in comparison to the fully diluted market cap. 11.3 for Phantom, 5.8 for 11.3 for AVAX, and 5.8 for Phantom.
Yes. So, sorry, the way I would look at this chart is AVAX has 11 billion total value locked, whilst Phantom has around 6. So you have a difference of twice. But in terms of the market cap difference, in terms of the fully diluted valuation difference, you have a difference of 7. So relative to AVAX, Phantom is undervalued. Now, I haven't studied the architecture in depth, but as a trade idea and some of the chatter regarding Andreconia and Daniela for basically they're teaming up to bring DeFi towards Phantom. I think Phantom could be a very interesting trade idea going forward, maybe for next couple of months.
Yeah, definitely. So this chart, goes into more of what Mehdi was just talking about. Phantom sitting here at 9 billion fully diluted, AVAX 68. So the potential to multiply your money is great there. So yeah, 5.8, 11.3 here. Phantom ecosystem again, it's growing every day. So we're expecting, out of these projects, Phantom might have some more competitive edge here, beginning 2022. Sorry. But yeah, that was pretty much it on my end. I'm going to go ahead and give it back to Forrest for Altcoin Showdown.
All right, so I've got my screen shared here, and our 3 altcoins for January for Crypto Showdown are Cadena, Near Protocol, and Phantom. So we're going to talk about these just briefly, but if you'd like to go vote, go use the Menti code 6284-6299 to vote for one of these cryptocurrencies for the best altcoin of January 2022. Mike, what do you think here? What's your pick for Cadena, Near Protocol, or Phantom?
Going to go with Near personally.
Gotcha. Okay. Mehdi, what's your take on this?
Yeah, I'm going to be a bit boring. I have to side with Micheal over here. I think Near Protocol for me as well.
I'm going to be a little bit different, and I'm going to go with Phantom. And the reason I'm going to choose Phantom is just the fact that those 2 DeFi developers, Andre Cronje and Daniela Sesta, are working so hard, and they ship stuff so fast for Phantom. And since this is top altcoin picks for January, I'm going to go with Phantom in the short term. Near Protocol, fantastic. Cadena, fantastic. But if we're going short term here, they ship stuff extremely fast. And in the short term, Phantom is still, like you saw the charts, very undervalued compared to some of the other big L1s that these two devs have built on. So I'm going to go with Phantom, but I think Near Protocol is the probably the best choice as well. All right, let's see what the audience thinks. And they went with Phantom. So Near Protocol and Phantom both going to be very strong altcoins in all likelihood for January. And with that, let's jump into, I'll stop sharing my screen here and we'll jump into some Q&A so we can go to kind of a panel view and talk about some different questions. So the first question is, have any of you noticed the recent Fuse Network run? Do you have any opinions on the fundamentals of Fuse Network? Personally, I do not. Mehdi or Mike, do you have any insight into Fuse Network?
I saw the recent pump it had. I remember looking at it yesterday night, but I'm not entirely sure what they're doing. So let me double check here.
Unfortunately, I haven't studied it.
Gotcha. Okay. And the next question is asking for technical analysis on Iota. So I also saw a lot of questions a lot of people looking for entry points into Luna as well. So I'll go back to sharing my screen here. We'll do some quick TA on Iota. So here's Iota. It's just been range bound. It's just been stuck range bound. And in the midst of this range, it has changed its fundamentals. If we go over here to chrysalis.iota.org/status, we can see 73.42% of Iota has been staked. That means there's at least 73.42% of Iota's supply off of exchanges. It's no longer on exchanges. That is a supply crunch. What that means is there's a very strong chance that there could be something called a supply squeeze. In other words, this price, Iota's price action, could become very volatile. Now, a lack of liquidity on exchanges, if there's demand, is going to lead to the price going up. However, if the market crashes, it could lead to a pretty nasty drop, in which case that could actually be an opportunity to get Iota at a very cheap price if we see the market crash and if we see everybody trying to dump onto exchanges when there's really not a ton of liquidity there to begin with. All right. Iota, you've been rewarded for buying on this long-term trend line. This is this bull market trend line. This has historically been the best place to buy Iota. If this market recovers and Iota continues to perform or starts performing well, and we start to see TVL flow into the Iota network, and we start to see devs start to build on Assembly, start to build on Shimmer, start to build on Iota, then Iota could perform extremely well. There's a really low supply on exchanges, and we could see something move very violently. This is personally my thesis for being invested in Iota. I believe that Iota is a high risk, high reward play, meaning that there's a chance that its architecture isn't ready or that its architecture is going to have some sort of security vulnerability. There's been concerns about that in the past. But I come from the mindset that crypto is such a fast growing and volatile market that if you can afford to take some of these high risk opportunities that can pay off significantly, right, with 10x, 15, 20x's, you only need to successfully capture those a few times to really be paid off. So personally, I think that Iota is at a very reasonable entry point right now, down here towards this trend line. Again, there's always risk. Just because I'm saying this is a solid entry point between $1.05 and $1.20 doesn't mean that we can't fall below this trend line if the rest of the market crashes. So you need to understand there is risk involved here, right? You could consider buying at $1.19 to $1.20, or even waiting for a little bit lower of an entry point, maybe at $1.10. And then just keeping a stop loss down here at around 95 cents or $1, just on the off chance that we do spill lower, right? But if we were to move to the top of this channel, and again, I'm not saying this is where Iota is going to go. I do think it's very possible for Iota to go to the top of this channel. It's been at the top of this channel in this previous at multiple times this bull market cycle. If it were to go to the top of this channel, it'd be at about $7, and that would be roughly a 6x from where it's currently at. So I do think that's possible if Iota accomplishes their vision and people really, really start to adopt it and build on it. That's still to be determined. That's still to be determined. I'm not saying it's going to $7. I think there's a plausible chance, though, that we could see a 2, 3, 4, 5x, 6x out of Iota. And I think the risk to reward ratio with the entry point being so close to this entry point is still very solid. Now, Luna. Entry points for Luna are going to be, and I don't have this second line drawn, but we've hit our first target, our first retracement target, and that's our 3x short level from our high, right? If we take our high and we take a 33, or actually not even quite a 33% correction, a 33% correction is going to be our next target of about $69 to $70. $69 to $70, I personally have an order in on Luna at about, I'm being a little bit more aggressive with it, at $71. Right? But the full retracement of our 3x short level would bring us down to about 70 or $69.50, right? There are some long margin pressure levels here at $75 to $78. And that's where we're starting to already see this support come in. We're starting to see people say, hey, Luna's at the point where I can safely go long on leverage, right? And hide my liquidation points down here. Right. And that's why we're starting to see some consolidation, some support in this range. We still haven't seen the overall market turn around. So we don't know if Luna's going to bounce here or continue down to $71 to $69. But that would be our second buy zone. Right. And one thing that I like to do is I like to construct two buy zones. Right. Let's just move this down very briefly to about $70. And you can buy here. And then if it drops, you can buy on the next support. And what will often happen is it'll bounce back to your original buy. Then you can close this trade in profit, meaning you're break even on your first entry, right? You're break even on your first entry, but you're profitable on your second entry, right? So that's a trade that I personally like to do. If it falls down to this next level, get the buy the bounce, and then you can sell the bounce and break even on your first entry, profit on your second entry. Even for longer term stuff or longer term entry points right now, pretty close, or we're pretty much on a trend line, right? So I think this is a fairly decent entry point. Again, market's shaky right now. It's volatile.
Yeah, what is that Luna has L1, and then it also absorbs the volatility of his stablecoin, which is US Terra. So it's going to be one of the most volatile and high beta bets. So Forrest over here is the technical expert, but I feel like there is a possibility to get a very low entry point, maybe perhaps $50, $60, if the bear market continues, or we have more jitters when the bear market, more jitters because of the bear market. I think it can even go down to $40 if there are regulations regarding stablecoin, because US Terra will become volatile and Luna will absorb the pressure of US Terra. So I think those will be the points to basically buy Luna for the long term. And also my other advice will be to DCA, not just like buy in one go, but rather accumulate in different price points, because nobody has a crystal ball in terms of at what point US Terra will settle down. And because of this volatility, you'll have different price points which will become attractive for the long run.
Yep, 100%. The next question is thoughts on Rune. Do you guys have any thoughts on Rune? Obviously, I'm big on blockchain interoperability, cross-chain stuff, but they have been hacked. What are your thoughts on Rune, Mehdi and Mike?
Yeah, it's very similar to Iota. It has a 3 billion valuation. Look at the tokenomics. It can accrue a lot of from Ethereum, Bitcoin, and basically reduce the dependency of exchanges. So I think if they kind of deliver, I can kind of easily see them at around 15 to 20 billion market cap. But then obviously it also has amazing backers. I think multi-chain is backing them. Delphi is backing them. I think in terms of risk reward, if you somehow get an entry point below $4 or $5, I think it's worth the risk. It's a great project, and sometimes these great projects have such difficult technicalities that you kind of over the period of time you kind of see a couple of hacks, but once those hacks are resolved, you kind of see them blossom.
Yeah, Rune looks like its ecosystem is developing as well. I've recently seen Thor Swap come out here this or last year. And that did pretty well on for Thor Chain Rune. But I think they just need one big project within their ecosystem to catalyst the whole thing off. Personally.
All right. So the next question is, based on our personal altcoin bags, what are the top 3 positions moving forward? What are your top 3 positions? So I'm a very contrarian thesis to most people. I believe in taking very large risks, high risk, high reward opportunities, because in the crypto space, if you hit your quote unquote lottery ticket, and there's theses behind it, right? And not just blindly throwing darts at altcoins. I have a very well put together thesis on my top altcoins, but I am looking for very high gains in the long term. So I have a long-term thesis, and I'm happy missing out, quote unquote, missing out on some of the big layer 1 momentum plays, because I view those as actually particularly risky once they've gone, and I personally trade those. So for example, I didn't get into AVAX or Luna very early, but I made a lot of money on AVAX and Luna trading it once the momentum was there, and once people started building on it, right? I didn't get into Luna at $4 or $5. I got in at $30 and traded it on leverage from 30 to 90, right? 90 is where I ended up taking profits, right? So with that being said, with that mindset, my number 1 position is actually Nano, because I believe that it's the best hard money digital cash solution. And I'm predicting that in the long term, that will become a narrative, right? Everyone talks about the need for digital cash, the need for an inflation-resistant cryptocurrency. I personally believe, based on all of my research, Nano is that solution. And I think it's better than any other digital cash solution cryptocurrency that I've personally researched. There's a very unpopular opinion among a lot of people, and it's very debatable. However, I am willing to sit and accumulate Nano for the long term to see that thesis play out. Next, my next largest position is actually Time Wonderland, in large part because I was able to get in early with I took a pretty big bet on Time Wonderland, mainly because I'm betting on Daniel Sesta, the DeFi developer behind it, and I see how fast he ships stuff, and I see he's on a mission to build a big DeFi ecosystem. And I'm betting on basically him and the ecosystem that he's building, and Wonderland is kind of the backbone, like DAO treasury for his DeFi solutions. Obviously, he's got abracadabra.money, he's got Popsicle Finance, but Wonderland kind of is I think gives decent exposure to everything that he's building. Third and fourth, fifth, and sixth, probably similar allocations to each. Well, third would probably be ETH. I don't have a huge spot allocation to ETH, but I do have a lot of exposure to ETH in the form of several different NFT projects, that are valued in ETH, one being RumbleKong's, Zed Run being another one. Another project I just invested in pretty heavily from an NFT standpoint is BigTime.gg. I think that they have a very fair launch model for both their token and their NFTs, and they're just a phenomenal team building a really cool video game that I think is going to be big. And then the other 3 larger positions that I have are Perp, perpetual protocol, because I think derivatives are undervalued in the space and going to be huge, right? Audius, because I believe in their long-term vision of bringing decentralization to the music industry. I just think that it's going to take them a long time to get there. That is a long-term investment for me. And then Iota, because again, I'm taking that high risk, high reward bet and offsetting some of that risk with some of the staking rewards that I'm able to receive on Iota. I believe the fundamentals for Iota have vastly improved with the adding the addition of staking. And I want to be getting into Iota at this point in time. Stake earns the staking rewards to offset some of my cost basis into the project, and then take that big risk that Iota is successful and does a 10, 15, 20x. What about we'll kick it over to Mehdi first, and then we'll let Mike walk through his bags.
At the moment, I'm accumulating near because I feel like it has a very similar architecture, not exactly similar, but very similar architecture to Ethereum 2.0. And Ethereum has 500 billion market cap, while Near has around 15, 16. On top of that, it has Aurora, which is EVM compatible platform, and they make it so easy for developers to kind of migrate towards Near, which I really like. Uh, Also, if you use Near for DeFi yield farming, you'll realize the wallet is amazing. For example, in case of me, my wallet is medifarouk.near. So it's the wallet system is amazing, and they have a couple of interesting projects building on top of them. On top of Near, one is Octopus Network. For example, Octopus Network will bring Polkadot app chains that cannot afford Polkadot security, or they can't afford to buy parachains in Polkadot. They can deploy it on Near. So I think Near has a very good prospect. On top of that, the VCs involved very early on Near. You're talking A16Z and some of the biggest VCs out there. So they must knew something beforehand in terms of the team, and also the team. Like they're one of the smartest people out there. Now, for me, one of the reasons why I think Near has a solid architecture is that the founding team has a background in sharding. And they were pioneer when it comes to sharded architecture in case of Microsoft, in case of Google. They worked on these system and databases over there, and I think if they can implement that in Near, I think we have a very serious contender for Ethereum. The only thing that is not going for Near at the moment is the TVL. But I'm taking a bet that the TVL will grow going forward. So that's my first bet. My second bet is Moon River. I think at current price level, you're getting a valuation of 1.4 billion fully diluted. And with Moon River, you get exposure to both Ethereum ecosystem as well as Kusama ecosystem, which I think is amazing. And I think at current valuation, it kind of makes sense. I think the risk reward is very asymmetric towards the upside rather than the downside. So that's the second project I'm looking at the moment. Final one is Cosmos. I really like the ethos, and I think there are few catalysts going for Cosmos. One is the IBC. So all the chains within Cosmos can communicate with each other, and I think that will enhance the network effect of Cosmos. So once the network effect of Cosmos goes through, then there will be some projects that cannot build their own blockchain, and they would want to rent security out. And then Cosmos can provide security to them. And when they provide security to them, those projects can airdrop their tokens to Cosmos validators, and then stakers like us, we can benefit from that. So that's another reason why I like Cosmos. And also, the community is so strong. If there are new projects launching just for marketing purposes, they reward in terms of airdrops to Cosmos stakers. So I feel like even if there is a bear market, you kind of get 14% staking rewards on Cosmos. And on top of that, let's say you get 20-30% rewards from other airdrops. I think that will be more than enough to kind of even compensate me when it comes to bear market jitters. So those are the three projects I'm looking at the moment, and I'm comfortable accumulating. Again, not financial advice. There are a few other projects I also like. Luna is one. I had Luna below $10, and I sold some at $100. I still have some. I think if it comes to 40, 50, $60 between those ranges, it will become very interesting again to accumulate. So Luna is another one. AVAX, I think it's also another very interesting one. it's not just layer one, it also is a exposure, can give you exposure to security theme, because with AVAX you can make subnets. So with subnets you can have permission blockchain, and going forward I can see some asset managers and VCs and some of the big funds basically making their own blockchains and basically securing them with AVAX validator set. So for me, this is exciting. Now, one thing you would have noticed, all of these chains are either layer one EVM platforms or layer zeros. I believe a next generation of FANGs, Facebook, Apple, Microsoft, will come from layer one and layer zero. That's my long term thesis. I'm going to stick to them. Even though the valuation is high, I kind of feel very comfortable letting them and letting them compound. It might not give you 100x return, 50x return, but I'm more than happy to get like few x's and just sleep well at night. So that's my thesis. Accumulate them with bit of aggression and basically let them compound.
Nice. My personal thesis, my personal bags currently. So I got into Matic when it was around 160 market cap ranking, and thankfully I'm still holding that. So that's my biggest bag. I believe it's going to continue that way. I think Matic is going to go to the top 5 in crypto market cap ranking. After that one, I have Phantom as my second biggest bag. Big believer in Andre Cronje and Danielle Siesta and what they're building over there. I initially FOMO'd into Phantom around 70 cents. I think I saw a post from Andre Cronje's saying buy Phantom. This is going to be your last opportunity to before this big pump happens. So I took that advice and I invested in Phantom, and now it's my second biggest bag, thankfully. Following that one, I'm behind Mehdi with Near. I think the team behind it, the development, as well as the ecosystem that's building out is second to none in comparison to other layer one blockchains that are currently building out the ecosystems. Other than that, I have coin called DeFi Kingdoms Jewel. That one has been pretty successful for me. It initially started off as a Harmony based project, but now they've expanded their project to Avalanche, and they're trying to encompass also other ecosystem and other layer one chains as well into that DeFi Kingdoms game. And what that is, like a gamified DEX as well as liquidity farming project where you can have your character go around in a virtual world and experience DeFi in that world. So it's pretty unique project. DeFi Kingdoms again was the name for that one. And I'm looking at some other MMORPGs and NFT plays as well. One big project that I have my eye on NFT wise is Ember Sword. This was a project I believe we shared on our YouTube channel a couple weeks back, and it's a MMORPG that's being developed by individuals from World of Warcraft, Blizzard, so very top tier AAA games that have been successful are building out this Ember Sword game, and I'm waiting for that one to pan out. Personally bought some land there. It's currently at 0.3 ETH for the land in that ecosystem or in that game. And last but not least, I'm also looking into buying Rise Online NFTs when they come out. So this game Rise has been developing, and you can currently download the alpha version of it. It's a MMORPG that's very similar to World of Warcraft, and it's already live. You could play around with it, and I think this is going to be a very big AAA game that's going to be pretty big this year, moving into 2022. So those were some of my picks. But yeah, the top ones: Matic, Phantom, and Near.
Awesome. We keep getting the question, what about integral.link, ITGR? So this was a project that scored well a while back. It's a DEX project. But they've not been able to acquire a lot of TVL. So yeah, DeFi projects are very difficult to build. Still a very solid team and solid investors behind this project, and they seem to still be actively working on this DEX. But at this point in time, it just looks like they need to make changes and improve the tokenomics. It's something that we've seen DeFi projects do in the past. It's something that we've recently seen Yearn Finance do, and is going up in value accordingly. But right now, yeah, pretty micro cap project, and lots of tokens vesting over the next 3 years or so. A lot of times these things take time and can recover if they have a good enough team to make adjustments. All right, so next question is, what trading platforms for leverage do you like? Personally, I just use Bybit. I've had a good experience with their platform. Yeah, Bybit, other good exchanges, especially if you're looking for a DEX to trade on leverage, would be DYDX or Perpetual Protocol. Anything you guys use, Mehdi or Mike?
Personally, I've only tried Perp, but other than that, I've been hearing a lot of talk about a new one called DopeX, and that's like an options protocol that's apparently giving 30% rebates to incurred losses. So that one's been gaining a lot of traction. DopeX was the name.
Cool.
Typically, I don't use leverage. Well, if I have high conviction, I've done it via Binance, not more than 3x.
Nice. And we have time for one more question here before we wrap up. And it's a question about Trader Joe. So I'm going to kick it to Mehdi to answer. The question is, Joe seems to be at a good price to buy, but has a poor TM rating. Thoughts? I will say the AVAX ecosystem is a little bit stalled out right now, right? The AVAX, in terms of, you saw the charts that Mehdi and Mike showed you, compared to Phantom, AVAX is a little bit flat right now, and that can change over time. But I'll kick it to Mehdi.
Yeah, there are a few things with AVAX. I got the Binance part right. They got listed by Binance. One issue Trader Joe recently had was Daniel Acesta of Time. Basically, he is shifting liquidity away from Trader Joe towards sushi, since he's working on sushi now, and since Trader Joe had a bit more decentralized mindset, and he wanted the community to decide how much APY it should get. So because of that, Trader Joe is coming under pressure. But when it comes to fundamentals, when it comes to unique visitors coming to Trader Joe, it's ever increasing. They're working on their tokenomics. They're launching new products. They're delivering. I like it, but I think it will remain under pressure. If you get amazing entry point, let's say near $1, I think then risk reward becomes very asymmetric. But at the moment, even though I really like Trader Joe, but I think market for a few months will kind of punish Trader Joe. I think the story is now very similar to how sushi was. It's going to be a bit of a undervalued pain trade for a while.
All right. That's going to wrap up our live stream. Thank you guys for tuning in, and make sure to tune back in on Monday for our next live stream. If you are not already, go check out tokenmetrics.com and become a Token Metrics subscriber /customer. Thanks.